Did you know that the Arizona housing market is finally shifting back toward buyers? That's right. After months of sellers calling the shots, buyers are regaining leverage. According to the Cromford Market Index, 11 out of 18 major cities across Arizona have turned in favor of buyers, including Cape Creek, Paradise Valley, and Avondale, while only 7 cities remain seller-friendly, like Tempe and Gilbert. Which shops the strongest? Inventory is climbing fast, nearly 25,000 active listings, and mortgage rates are holding steady around 6.35%. That combination means more choices and fewer bidding wars for the buyers this fall. Meanwhile, the luxury market is still carrying prices, with homes over $2 million up 7% year over year, while the entry-level homes are seeing small price drops and more negotiation room. The bottom line, the Arizona market is rebalancing, and the opportunity is knocking for the buyers right now. Stay tuned. The next 15 minutes, I will break down which cities are shifting fastest and the strategy are working right now in today's market. With that, let's dive right into the first information of today. We see that the Arizona market momentum slowed down. The buyers regaining ground. Like I said earlier, after several months of seller-friendly momentum, the tide is shifting again. Cromford Market Index, which is the index that shows the clear market condition created by the Cromford Associate in Arizona, show that the market is turning back in favor to the buyers. Specifically, we have 11 out of 18 major cities moving in that direction over the past month, meaning towards the buyer. And by the way, yes, you hear it right. We now have 18 cities on the list instead of 17. If you've been following my channel, you know that I've been saying 17 cities. But now, Queen Creek has officially been slipped from Santan Valley. Okay, so that reflecting in the main reason is that Queen Creek has a rapid growth in the economy right now, and that's the reason why it is in a good demand to split the two cities separately. Previously, we combined the data together. On average, we see that the CMI dropped 1.1% this month. So last week, we have a slight increase of 0.4%. This week, we have negative 1.1%. This slowdown is expected. Now, here's a point. This is the first slowdown week. However, it is going to continue through mid-November because this time of the year, normally more new listings become available on the market, and the buyer normally soften because the holiday season. People tend to not making home purchase during the holiday season. Which city is on the move? Let's look at that. 7 cities that's actually moving toward the seller's market. 4 cities that in the balanced market, meaning both the buyers and the seller has the same equal negotiation power. And the 7 buyers, and there are also 7 buyers market. Okay, some of the cities that favor to the seller is including a city like Tempe. We have a 9% increase toward the seller. We also have Fountain Hills, 4% increase towards seller. Scottsdale, 6%. Chandler, 1%. Gilbert, 10% increase toward the seller side. Mesa, 6%. Phoenix, 2%. Those are the cities that are moving favorable to the seller. And we're also going to look at the cities that are leaning toward the buyers, like Cape Creek, Paradise Valley, and Avondale is leading that shift. Specifically, we have Cape Creek, negative 13%. Paradise Valley, negative 12%, and Avondale, negative 7%. Those are the big shifts toward the buyer's market. Overall, the pattern is clear. The buyers are slowly regaining leverage across much of the cities. Last week, remember, we only have 6 toward the buyer's market. Now we have 7 already and 4 in the balance. And the 4 balance, okay, we're looking at the market index about 90 to 110. We're talking about Mesa. We're talking about Phoenix, 105 points. Now it's also reduced 1% compared to last month. Glendale 99.7%, 99.7 change negative 3% toward the buy. So a lot of markets moving toward the buyers in this week market. What about the supply? So we have an active listing are climbing very fast. Over the past week alone, the number of the homes for sale without contract has grown 1.85%, putting us on track of more than 25,000 active listings across the greater Phoenix area very, very soon. Means we have 25,000 sellers that cannot sell their house on today's market. Interest rate, in the other hand, has been holding steady, 6.34 to 6.38% for the 30 years fixed loan. The reason why I have to specify the 30 years fixed loan is this. The 15 gonna give you a better rate, but it's make you require a higher payment. If you do like hard money loan or maybe some special loan program, you're gonna have a higher interest rate. This is an average for 30 years fixed rate. And also, by the way, the reason why there's a range is also depend on the number of down payments, the credit score, and the debt that you have. So it depends on the situation. While this isn't high enough to discourage buyers completely, it's also not low enough to spark another demand wave. So this has been actually the 6 point something, 6.35, 6.38. I know it sometimes go down to 6.25, it sometimes go up to 6.7. But here's the thing, that has shown a stable range. Is this range right here? So it's not something new to the buyers, and that's the reason why it doesn't spark demand in the buyer's market. That's the reason why there's still more and more homes available on the market. 25,000, we are going to reach over the 25,000 active listing very soon, and therefore you don't have to worry about bidding wars in today's market as a buyer. Now let's talk about the luxury home a little bit. The luxury sectors, the luxury homes, meaning houses that more than $1 million, continue to drive overpriced strength. In September, if we're looking at home that over $10 million, that's 6 homes sold, adding nearly 80 millions in volume. Okay, so even though there's only 6 homes, but because the value of it is more than 10 million, is adding 80 million in volume and lifting the average volume per square foot by 2%. Obviously, because those are the homes that has a higher value. Home price is over $2 million, saw a 7.2% increase in price per square foot compared to last year. In the other hand, if it is less than $2 million, it actually fell a little bit, of 0.6% in price per square foot. In conclusion, without the luxury market, the overall appreciation would actually be negative. We are seeing a lot of positive right now is because these homes, 6 homes here, and the homes that sold over $2 million, driving the volume, the price higher, average price higher. Because of that reason. Specifically, if you're looking at the first-time home buyers market, which is more about like $300, $400, $500, $100,000, which could go up to $600,000 to $700,000, the first-time home buyers, they still hesitant to buy. However, we see that the supply is still far exceeds the demand, far more than the demand. Many entry-level buyers are cautious despite the soft price and stable rates. We obviously see that. I keep repeating myself in this episode, is the supply is going crazy. There's so many houses for the buyers to choose right now on the market, 25,000 houses. The interest rate has been around that for so long time. More and more seller is willing to give price reduction, okay? But it doesn't encourage the buyers enough, especially the entry-level buyers enough. But those who do take action right now are in great position to negotiate. But they do need a strong representation to avoid overpay and missing incentives. Some of the buyers, some of the real estate agents just like, okay, buy it. And they don't understand the market, right? They just say, okay, whatever offer the full price, lower your concession requirements, okay? Those are the things that less favorable to the buyers. But in this market, negotiation is a key for the buyers to get most amount from the real estate transaction. So those things we can discuss if you are interested in discussing about, okay, what kind of strategy, what kind of this negotiation that we can do during the real estate transaction, feel free to contact me directly. Builder. Okay, so we talk about the luxury home. We talk about luxury home here. We talk about the first-time home buyer here. We are going to now talk about the builders. Okay, brand new home. Builders are also pulled back, and they actually offer a lot of incentive right now. If you look at late August, they very optimistic about the real estate condition. However, now they actually also scaling back production after seeing a lot of demand falling off, even though the interest rate dropped a little bit, but the demand doesn't rise a lot. Several offers a lot of price cut and incentive on quick moving home. And here's the thing, the reason why the quick moving home, the builders has a strong reason to offer higher incentive on quick moving home is because they want to get rid of homes as quick as possible as well. Some of the incentive including 3.99 interest rate for 30 years. Okay, that's crazy, for 30 years. And you don't have to pay your closing costs. You don't have to pay the buyer agent as well. Some community also include washer, dryer, and even appliance in the purchase as well. Now here's the thing. A lot of buyers want to offer lower price on the builder home. Well, you could. The reason why not a lot of builders willing to accept that is because they want to keep the home value in that neighborhood as consistent as possible. And sometimes the buyers offer too little because the new build has a certain value compared to the old house, right? So you cannot look at the old house and say, hey, this house right here, built in 1990s, just sold for 400. I'm gonna offer 2025 home for 400 as well. That doesn't make sense, right? So the newer house, they have a certain value in that, and that's the reason why the builder do not lower the price if it is too much of the ask. But that makes sense because they don't just build a brand new house and then sell it back to with the same value compared to the old house. Now, like I said, if you want to discuss more about the negotiation strategy, well, feel free to contact me. I'm more than happy to discuss with you about the specific home you're looking at. Now, we are going to talk next about the national market average. This number right here is the number of homes for sales, available homes for sale across the country. We actually, and if you look at the green columns, those are the most recent months. September 2025, we are at around 1,100,000 homes available across the country. And that's also the fixed rate month. With active listing over 1 million homes, we started around May 2025, 1,036,000. That is the level we haven't since 2019. 2019, here they don't have all the data, but 2023, 2024, 2025, the beginning of 2025 is still less than 1 million homes. Okay, let's go up, let's go down, let's go up, let's go down. Now let's go up more than 1 million homes. Okay, that increase in inventory is reshaping the market. Okay, and that's the reason why I'm saying it's giving the buyers, not only in Arizona but also across the country, more options to choose that the buyer hadn't had for years. If you were in the real estate market back in 2019, 20, and 21, you know how difficult to look for a house back then. Now we have plenty of option prices. More sellers are making price cuts. In Arizona, 26% of the home active listing that give the price reduction. In California, 19%, Oregon, 28%. Across here, every single state, as you see, has the percentage of sellers willing to give price reduction. That the reason is that many homes stay on the market longer, and the sellers are realizing that they can't price their home based on the expectation of a couple of years ago, but now have to be in realistic situation, right? With that, more competition in Arizona, almost more than 25,000 active listing already available, price reduction become more common. What about home price growth? We see a lot of home price cuts, and we think that home price growth is actually negative. But look at this chart. It shows clearly that every single month since 2024 is a positive home price growth compared to previous year. The most recent data, this is across the country, 2.3% in July 2025. It's still a positive growth, but it's much slower than what we see in the previous months. And that indicates the market shifting more toward the balance, more sustainable market. Appreciate still continue to go up, but it's not at the record-breaking speed. Okay, very stable, slow. So that is everything that I have in today's episode. Thank you so much for watching, by the way. For seller, here's my advice for you. September was better with resale price bouncing back, but be prepared for shifting competition as new listing coming to this fall. You have to have a strategic pricing, and you have to have a marketing strong enough to encourage the buyers to come and see the house in person. The buyers, you are actually in a very mixed market, and it depends on the city. Some cities that still favorable to the seller, and some cities are still favorable to the buyers. Most of the cities, 11 out of 18, moving towards the buyer side, right? But you do have to have a real estate knowledge in that market to understand whether you are in the seller or you are in the buyer's market to be able to make this negotiation strategy correctly. That's all I have. And if you are interested in receiving like the weekly market update, feel free to go to this website by scanning the QR code right here, or you can go to the Magical Success Realty website, go to the market update right here, and you will be able to see all the plots, all the market update I have of the last couple of weeks. Thank you so much. Bye.